Hello everyone. Today we're talking about credit cards and how to use them properly in 2026. First thing we're going to talk about is how to use credit cards long term correctly. It affects your mortgage rates, it affects your business funding, it affects your insurance cost, it affects your leverage. Your credit profile matters more than most people realize. So today we're going to give a clear blueprint on how to maximize your credit correctly. Step 1, understand what a credit card actually is. A credit card's not income. It's a short-term loan with a reporting mechanism attached to it. Every month, your lender reports three main things: your payment history, your utilization, and your account age. The goal is not to use credit. The goal is to demonstrate controlled, disciplined usage over time. Think of it this way. Credit is your reputation score. And reputations are built slowly, but can be damaged very quickly. So you always want to be consistent and do everything intentionally. Step 2, start with the right foundation. If you're new to credit, don't chase premium cards. Start simple. Look at beginner-friendly issuers like Discover, Capital One, Chase. You may want to consider getting a secured card. That's roughly where you put so much money down and just use credit from that. You can put as little as $200 down and have a secured credit line. If you're rebuilding credit, secured cards is perfect. Your first goal is approval, and then you got to worry about you got to remember there's no annual fees. Be sure to check for simple rewards and clean reporting. You're building infrastructure. Step 3, 10% utilization rule. This is where most people go wrong. Your credit score is heavily influenced by utilization, how much of your limit you use. If you have a $1,000 limit and report $700 balance, that's 70% utilization. That hurts your score. My rule, keep reported utilization under 10%. If your limit is $1,000, keep the statement balance under $100. Ideally, you want to get it down to around 3% to get the most out of your credit score. Always remember, it's not the due date balance, it's the statement balance that you need to pay the most attention to. This shows lenders you have access to credit, but don't depend on it. That signals strength. Step 4, understand statement date versus the due date. And this is critical right here. There are two dates: the statement closing date, the balance that gets reported, and then there's the payment due date, the date interest would begin if unpaid. The optimal strategy here: first, before the statement closes, pay your balance down below 10%. Second, after the statement generates, pay the remaining balance in full before the due date. That way, you show activity, you show low utilization, you pay zero interest. This is disciplined credit use. Step 5, automate everything. Late payments destroy credit. One 30-day late mark can stay on your report for a very long time, and that's really just destroys any goodwill that you have with the credit card company. We want to focus on consistency over time. Every month, pay your bill, same time, keep everything consistent. So when they review your files, it'll show you've paid consistently. They know what to expect. I always set up automatic minimum payment. Calendar reminders to pay full statement balance. Monthly reviews is a great habit to have. This removes human error. Really, you want to review every week, at the minimum. I like to go through everything every single day. You can find where you spend your money. If you need to get an app to track your expenses, that's great. I use ChatGPT. Step 6, the expansion strategy. Once you build a clean history, request a credit limit increase. Add a second card strategically. Keep your oldest accounts open. Always remember about getting a second credit card. You want to pull from different credit bureaus. So if your first credit card is from Experian, you want the second one to be from either TransUnion or Equifax. You want to get a big credit profile and have a different credit mix as well. We'll go into installment loans and other ways in future videos. So be sure to check those out if you get time. Now, one of the main things to remember is payment history is important, low utilization, and length of credit history, as well as credit mix. You don't need 10 cards. You need strong accounts with age. This is about depth, not quantity. Step 7. When we start adding start building a credit profile, we want to focus on add a reward strategy. If your score is above 720 and your discipline is proven, you can optimize. Just remember, cash back is often better than points early on. For example, a flat 2% cash back on everything is great. You can get 3 to 5% on groceries or gas. Always remember, rewards only matter if you're paying 0 interest. Interest wipes out rewards instantly. Step 8, business credit strategy. If you're building a business, separate personal and business expenses. Issuers like American Express and Chase offer business products that protect your personal profile, help build business credit, and simplify accounting. This only works if your personal credit is already stable. Your foundation is the most important. Now let's go over 3 mistakes that destroy credit. Most people damage their credit with 3 things: high utilization, late payments, and closing old accounts. High utilization signals dependence, late payments signal instability, closing old accounts reduces your credit age. Avoid these 3 and you're already ahead of most people. Always remember, your credit score is your reputation, and you always need to monitor it and make sure that it's taken care of properly. And it can actually help you get a lower mortgage rate over 30 years, which can mean you're saving tens of thousands of dollars. You can, better business financing terms improve your cash flow. Your credit is your leverage. Always remember, a strong credit profile gives you real estate access, business funding access, liquidity options, and negotiating power. You build credit consistently with patience and discipline. Appreciate everyone watching the video this week. Please hit the like and subscribe, and we'll make another one next week. Thank you.